business development with the Canadian Securities Exchange. Welcome to another episode of Weekly Market Update. I think, Bruce, we are on week number 5 and we haven't been canceled yet. So that's pretty exciting news for us. We've actually had some pretty good traction on our views. So make sure if you're watching this and want to see more, you hit the subscribe button and we'll make sure that we let you know every week when we put this out. I am joined today by my co-host, Bruce Campbell, who is with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, we had obviously a big pickup in volatility this week, so we have lots to talk about.
We do have lots to talk about. Okay, so the agenda for this week, we're going to talk a little bit about some stuff. We're going to touch on a few things that we talked about in the past few sessions. GameStop came up again in the markets. We're going to talk about the new Bitcoin ETF that came to market, and then we'll jump into this week. We're going to talk about the momentum sell-off that we saw over a few-day period this week. We're going to get into rates, big topic, and affects a lot of elements of the market. We're going to talk about the Canadian dollar, and we'll end off with a little bit about what's going on with Shopify, the largest Canadian public company that is out there currently in our market. So definitely want to touch on what's going on there and a big raise that they just did. So let's touch on last week. What happened with GameStop?
Yeah, so it had another sort of big jump up, not nearly as big as it had before. And really, you can search around online and try to find an answer for it. And there really isn't anything substantial. One of the things that I saw that I thought was kind of interesting was just recently the CFO has resigned, and they didn't really give a reason for that happening. And one of the theories that I had heard was that, a lot of these CFOs aren't huge proponents of Bitcoin. And so the thought is that, maybe GameStop's going to make some sort of change in their business where they start to have some sort of Bitcoin release or exchange. And the thought is that, they would actually turn themselves into almost like an online gaming center where they would reward players with Bitcoin. And obviously that would, people would pay to play. And one of the things they would do is give out Bitcoin. So, obviously we haven't seen that yet, but, that's one of the theories. And obviously, we haven't really seen them tap the markets here yet, but, certainly wouldn't be surprising if they did raise some equity in order to sort of fund that. And that was one of the theories that we saw out there as far as why it's had the big jump that it did, or bigger jump that it had.
Well, I guess when you have that kind of a market share and that visibility within the marketplace, that might be a good time to do something, right?
Yeah, I mean, obviously their business model is one that, from all accounts looks like it's, sort of the sun is setting on it. And so, they'll need to look and discover and change what they're doing in order to avoid being, sort of the blockbuster of games, right?
Absolutely. We also saw, more activity. We knew we'd see this, the new Bitcoin ETFs that came to market. One thing I found interesting, you actually mentioned this off camera last week, but just the management fee that went alongside that ETF, which was a bit of a different management fee than we normally see for ETFs. And what ensued this week was a bit of a management fee war. Can you touch on what happened?
Yeah, so the Purpose ETF now has got, from what I've seen, about 460 million Canadian in it, so that's fairly significant. And then the Evolve that came out this week. It's sitting somewhere around 40 million. Interestingly enough, I mean, there's a difference in fee there. The Purpose fund is 1%, and the Evolve's 75 basis points, which, both those for funds that just hold pure currency in the form of Bitcoin seem to be pretty high. You see a lot of ETFs, a lot of large US ETFs are less than kind of 20 basis points as far as management fee goes, and these ones are fairly high up there. So I wouldn't be surprised if you saw some other people jump into the market on two accounts. One is to try to capitalize on the money that's been raised there. And then two, obviously, somebody can come out with potentially a cheaper version that helps investors gain, more of the traction from the movement in the price versus management fee.
Absolutely. And I guess, I mean, the one thing that you're paying for with these management fees now that it's in an ETF is you can now hold it in your TFSA or your RSP if you wanted to hold, a cryptocurrency within those holdings. Is that right?
Yeah, for sure. The structure is important. Obviously, all the regulation and the safety is important. Some of the things like, the audit and the performance reporting and, all that's very important, especially in, what is, still kind of an emerging area, right? There's still, you still see headlines of these huge, frauds currency exchanges, not on the hard currency, but on the cryptocurrency exchanges, right? So that's to protect you from all that as well. So you do get money and value for your money there when you invest in those ETFs because of some of those advantages.
Do you think that there's a chance that there was a little added volatility within Bitcoin this week, just due to the sheer amount of volume of capital flowing to it? Do you think that that's just a reaction to it?
I guess it's possible, but if you think that, they value Bitcoin right now at about $1 trillion, and this is, call it right around 500 million Canadian, which the trillion is US. It's not a lot. I would suspect that, probably somebody like Elon Musk's comments would probably have a bigger impact on it on a daily basis than, a Canadian ETF at this point in time. That might change down the road, but that certainly would be the case right now.
Well, it's quite interesting, and I saw that Elon actually tweeted about Bitcoin again this week. There's some theories out there, every time he says something about it, that it now has a direct correlation. Tesla did suffer a little bit this week too, and they're saying that that's now correlated to Bitcoin. So it's interesting to watch this play out, that marriage between them all. One theory is that maybe he talked about it softening a bit because he's hoping for it to soften based on his words so that he can buy more in Tesla. So we'll see what happens there. Okay, let's talk about this week because there was lots going on this week. Let's talk about the momentum sell-off that we saw.
Yeah, so we saw a fairly significant momentum sell-off in the multiple standard deviations of what we normally see. It's really the the second worst sell-off in history, or sorry, since 2009. In the last 20 years, it's it ranks right up there, and it's the third in history as far as momentum goes. And what you really saw is a shift in what investors are looking for. So they went from what's been the high momentum, sort of the big price movers, and they shifted into some of the other areas that were kind of more value. So you think about the Teslas in the world got hit, the Apples, they got hit this week, the Amazons got hit fairly hard, and some of the areas where we saw money flow into was financials, and you saw some money move into energy as well, as you saw this rotation. Interestingly enough, now with what's kind of gone on, when you talk about we talk about momentum, there's sort of different categories of how that is, because now one of the largest momentum ETFs in the US does include energy stocks, because that now has price momentum. So all it's showing us is there's a real rotation and a shift in what we're seeing within the market. Part of that had to do with rates. I mean, we saw the US 10-year, which is what a lot of people track. You go back a few months ago, it was 60 basis points, so 0.6%. And this week it touched 1.61%. And so what that means is that if you're a big institution and you look at your bond holdings versus your equity holdings, what's been happening this week is your equity holdings have, they were more or less staying where they were. Your bond holdings have been going down as yield goes up. And now all of a sudden you take a look and go, wow, I need to rebalance. How do I do that? Well, I sell equities to buy bonds. And so then I put the pressure on, equities down as the bonds, are recovered, right? So you saw that from an equity market perspective, and that's just, risk. And then obviously those have all the ripples through the market. So if that's, someone getting a margin call, if that's, the hedge funds in their, degrossing, where they bring their exposure down because now the volatility is up, and, it just sort of creates this a bit of mass movement in the markets, sort of one way or the other. And we saw that, right? Like there was big down days, there was a bit of recovery, and then, it sort of washes out, and it all comes around. It's not coincidence that it all comes around the the end of the month, when people are starting to report their holdings, and where they want performance to look strong for the reports that'll go out next month to investors. Yeah, I mean, even if you think about it, like, and they have a 50-50 portfolio of bonds, stocks, and now all of a sudden rates go up, so their bonds start to dip a little bit in price, and so now they want to rebalance back to that 50-50. Well, in order to do that, it means they have to buy more bonds. And in order to buy more bonds, they need capital from somewhere. So they sell stocks and buy bonds. And so that puts the pressure on the equity market when they do that kind of all en masse. And they tend to make those decisions and those shifts kind of into quarter ends, into month ends, And so, that's kind of one theory of what has been going on this week. And it has to do with rates and, ticking up. And then, obviously the other issue with the rates is that, you saw some of those higher technology companies get hit. And the reason there is that, a lot of those companies they have, huge appetites for capital. So they're constantly going to the debt markets and using up more money. And when rates are low, it's fine. Investors are saying, yeah, that's fine. Like, you want to borrow as much money as you can to grow. That's great, because, money's cheap. But now all of a sudden, when rates start going up, investors start looking out and saying like, oh, gee, like if rates go up and these guys start to slow down in growth, what's going to happen to my investment? And then it's just like, okay, we'll get out. And then, it causes a bunch of other people to all want to get out as well.
That's super interesting. It's amazing the ripple effect from something like that. And I'm sure it carries on much further than even how you describe it. Why don't we touch on the Canadian dollar? What happened?
So what we're seeing with the Canadian dollar is something that we think is quite interesting and could have, sort of ramifications going into the future. So we track a bunch of different momentum indicators, and we look at it on, sort of short, intermediate, and long term. And our long-term indicator, so a monthly indicator, has just gone positive. It's only the third time that we've seen this happen in the last 20 years. And what that means is that, going forward, we see fairly strong returns for the Canadian markets, which is great to see, because we've, really underperformed over the last decade. If you sort of take that the next step further and you look at the relative strength of US markets to global markets over those timeframes, anytime the relative strength to the global markets is in favor of the US, and we have a chart that hopefully we can put up, which will actually show that with the line going down, because it's US compared to global. So the line's going down when the US is losing relative strength. Well, when that's happened, the TSX has really outperformed. So there's, again, hopefully we can get these boxes and charts up there, but, there's an instance in 2003 when we saw the Canadian dollar go positive and we saw the global markets with relative strength. And you can see the returns for the TSX were way in excess of the S&P. And then if you look at the 2009 period, was the last time we saw the same momentum indicator giving us the signal that it is right now. Well, at that point in time, the US still had relative strength to the global market. So Toronto had strong returns, but they underperformed the US. So right now we have similar type of scenario to what we saw in 2003. You go back to that time frame and you think like, well, what was happening back then? Well, we come out of a recession, we were seeing, growth and inflation. And, so that meant like commodities, oil, and the financials were doing really, really well. And those are what, really drive Toronto. And that's really what we've seen for performance, sort of year to date. And, you sort of go back into November, you started to see that shift change. And it's really, starting to accelerate here now. And so, could be, fairly positive for the Canadian markets here in the next, sort of 3-5 years.
It's so funny that you talk about the year 2003 was the first year I got into the markets. I became a broker in 2003. I had my first child. He was born in July of 2008. And so obviously I went into my maternity leave and my blinders went on. So I've participated in the markets in interesting times, and I went to sleep during the really rough patch. So it worked out for me in the end, I guess. Okay, let's talk about Shopify. Shopify did a pretty big raise. It seems like it was a bit of a quiet capital raise that they did. They just announced that they raised 1.55 billion, I think. What do you think about that?
Yeah, it's just a cool 1.5 billion, right? I mean, what's that mean, right? Yeah, I mean, it sort of was buried in a press release. It got a little bit of headline, but not a ton. That's a fair bit of money. I mean, obviously they're Canada's biggest company by market cap right now. Part of their earnings, they talked about the fact that, things might start to slow, not, as far as like going negative, but just the rate of growth. And they've had, such huge rate of growth in the last year because of, COVID and people, creating businesses and trying to morph their businesses to be able to take advantage of all of us sitting at home. And that growth rate's been, exceptional. And now they think that, maybe that growth rate could slow down a little bit. So, they sort of talked about that in their earnings release, and then also mentioned like, oh yeah, by the way, we raised like 1.5 billion.
Well, and it's interesting. I think Shopify is important as a Canadian because it's our biggest company. It's our biggest public company out there. And our CEO, he sends these lovely emails every morning talking about what's going on in the market. Richard, please never stop. They're amazing. I love starting my day that way. But he talked about, the general impact that Shopify also has just on the employment that it offers in Canada, mostly Eastern Canada, but it offers a huge amount of employment. It means a lot to us, I think, in the markets, and I think its movements and what it does, it depicts a lot for us. There was also a comment that maybe they might have to implement a bit of an Amazon type business model to keep up with the times.
Yeah, I mean, there's been lots of talk about, kind of how they can diversify and where they can go. And I mean, obviously that's what'll really separate them from, the past darlings that have been in the top of the TSX list, that are no longer even around, or I guess, small compared to what they were. And this will be what their legacy is going to be. Like, could they get to that size and then, continue to grow and diversify like, say, an Amazon did? Or, do they end up being the Nortels of 2021?
That would be unfortunate.
Yeah.
Anything that we should think about going into next week?
Well, I mean, one of the things that we saw this week is we saw, a fair bit of earnings. We'll still see a fair bit next week. The banks are all done this week. And I mean, the numbers look fairly strong. We're going to see a lot of other Canadian companies reporting, over the next couple of weeks here. So there'll be lots of catalysts from an individual company side of things. And then from the macro side of things, obviously, all eyes will still be on interest rates. All eyes will be on commodities to see, kind of where things are going from that perspective.
Interesting. I do want to end off and just give a shout out to one of our issuers. There's a fantastic podcast that was just produced this past week by James Black and one of our issuers, Big Digital Assets, with their CEO, Mark Binns. I just wanted to bring a shout out and awareness of this podcast because it really talks about this, the cryptocurrency and exchanges around there. If anyone's out there that has an interest in learning more about this, I personally found it incredibly educational as far as understanding how these cryptocurrency exchanges are working. So I encourage people to go check it out. Thank you again so much, Bruce, for your time today. Look forward to seeing what's going to happen next week.
Exactly. Yeah. Hopefully it's a little calmer than it was this week.
Absolutely. Take care.
Okay. Have a good weekend.